Welcome to tonight's episode of Cry Finance. Today is October 23rd, 2024. I'm your host, Cry, and if you don't like any of that, you can cry about it. But remember, emotions don't belong in these markets. So let's leave that noise behind and dive in to today's key insights. So the Dow and the S&P were both down about 1% today. Uh, this really isn't a shocker. Nobody's really too upset about this. Yeah, okay, we've got a strong dollar, but really there's another story there, and we'll talk about that a little bit later. But really, the Dow and the S&P both down 1%. The Nasdaq pulled back about 1.5%. This is all just commonplace. Don't worry about it. It's all going to be fine. Our main focus is the election right now. So this is just noise, volatility. People are selling. I mean, we've gone up so much, so it's not a big surprise here. So I haven't done an episode since last Friday, and I'm sorry about that. But there just really hasn't been all that much going on to motivate me to do an episode. Uh, we really haven't seen too much exciting news. Really the main story that's been gripping these markets is the Boeing saga, which just continues. I think they had the workers union decided that they didn't like the contract they were offered, or whatever the case may be. Whether they buy into the contract or don't, the fact of the matter is Boeing loses either way. They're going to have to pay for all these workers, and the stuff they build doesn't really seem to work. So the Boeing story continues. The stock has gone from about 145 to 160 and settled today around 157. So we'll see how that continues to go. But for now, it's just a lot of noise. Boeing probably going lower, but we'll see. So if you haven't already, you should really like, comment, or subscribe or interact with the video in some way, because that really seems to help me out. Makes me feel good about myself. I get that little ego boost. And there's nothing wrong with that, There's nothing wrong with getting a like from somebody every once in a while. So press that like or subscribe button or whatever button's in front of you. Just press it. Just go ahead and press it. Except a buy or a sell button. I'm not giving advice here. I'm just talking about interesting stocks, interesting facts. It's not financial advice and all that. First up on charts of the day is going to be IONQ. It had a really interesting day. We've been talking about this one for a while, and it closed at 1474, down only 27 cents on the day. The stock started the session testing the 16 area, but as the broader markets dropped, risk off sentiment weighed on its rally. This pressure pushed IONQ down to the low 14s before it recovered to close at 1474. Despite the pullback, the way IonQ handled today's heavy selling shows its strength, and it really remains capable of pushing back up to the $17 area. So, really, every time we've seen this thing go for the $17 area, it really just pushes right through 15 and heads there within a couple days. The second chart I want to talk about today is SPX, and we'll close it up there. SPX, for the most part, always sticks to the median band and is currently about 30 points below that median band on the 4-hour interval, something to pay attention to. Additionally, the SPX tested the old resistance level at 5760, which, if you've been following my previous videos, broke through with heavy strength to the upside. This makes 5760 a strong support level, as it proved to be today. I expect the market to use the last 2 days of the week to recover the weekly candle as the SPX continues its march toward the 6,000 level. Now, the story today and over the last couple days has seemed to be that bonds are selling off and that the yields are going up. Now, that is part of the story, but I think the real story that's not being discussed fully is the potential for a JPY carryover trade part two, which again, no one's really talking about. You're seeing UJ at 152, GBP, JPY, I believe, is at like 198. So we're really getting into those danger zones that Bank of Japan really doesn't like too much. And if they decide to intervene again, this could be potentially really bad for the markets in the short term. Now, if they don't intervene and the market believes that they won't intervene, you'll see the market rally. But I think for now, the market's waiting for a sign to see if BOJ is going to make a move. But I personally don't believe BOJ will make a move. That's Bank of Japan, if I haven't said that already, uh, before the election. I think they'll wait until after the election because before the election, it could cause the markets to shift very rapidly, and they want stability going into the election. Well, that's it for tonight's episode of Cry Finance. I promise, I pinky promise. I don't know who I'm pinky promising with, but I'm pinky promising to somebody that I will be here tomorrow and I will be doing an episode again. So sorry for missing a few days, but sometimes you just need to take a quick vacation because it's a lot of work. It's a lot of work making these videos. So just remember, subscribe, comment, like, all that good stuff really does good things for the channel and inspires me to keep doing this. So that's it for tonight's episode. Have a good night. And as always, I'm Cry. Have a good night again, and I'll see you tomorrow.